Hi, traders. This is Brad Gilbert with the FX Market Insight for Friday, the 22nd of Feb. All right, now as we come into the Asian session, there's the Aussie and Kiwi are the two big standouts here that have really, well, check out the Aussie. It's really snapped through the top side and the downside of the technicals. The rest of the currencies, I'll just cover those first, then I'll come into the Aussie and Kiwi again. Euro just ticked away higher through that resistance, a day or so ago, 113.20, now just trading sideways. We are waiting sort of some substantial Euro or US data to really give it another kick. It's really just gone into massive pause mode, as has sterling, waiting for more Brexit updates, random as you like. It's still way too hard to call what's going on there. Dollar CAD, I was reading Reuters and they sort of come out and said, oh, well, oil's lower, so dollar CAD's higher, but it's hardly moved, if anything. What has happened is the Bank of Canada governor has come out and said that future interest rate moves will be very gradual. It was slightly probably against what the market was expecting, and we've just seen a dollar CAD slide back up to above 132, back into that range. To me, it's cruising straight back into that mid-market, sideways moving market again. Dollar yen also cruising sideways. Now, back to the Aussie now. We had some really strong employment numbers yesterday. It was the last fundamental release. We're hoping for weak numbers. It came out really strong, and we saw a massive little spike. Probably more people squaring up their shorts than actually getting long. The fundamentals in Australia are weak, and I'll show you the whole fundamental backdrop in a minute. But that move was a little bit short, and it sort of pulled back pretty quick. And there was something obviously simmering in the background. What it was is there was a couple of articles that came out across the board that did show that China, they haven't exactly banned coal imports, but they are delaying them up to 45 days or longer. So Australia, it's one of Australia's biggest exports to China. So that's going to be a massive sort of left field black swan event almost for the Australian economy if that ban is real. Now, we saw it sort of dip down to sort of 70.85. It's just been washing around here at the moment. The market's not exactly sure whether this is old news, new news, or what the hell is going on. But Kiwi went with it as well. Traders don't wait for the confirmation. They trade the rumour, and then they'll do something once it's come out. So, to me, pressure on the downside in the Aussie, despite the really strong employment numbers, and that's going to put further downward pressure on the Kiwi as well. All right, now let me just come across to the dollar index. I mean, just to give you an overview, there's not a hell of a lot of change here with, what's going on across the board here. Now, the dollar index, yeah, sure, short term, it's just drifting lower. But if you look at the moves here, it's hardly like a downside move. Once again, this is not US dollar weakness. It's just a drift lower with no momentum, no economic data coming through to really give it a good push. So, if I widen the chart out a bit, you'd see it's actually just trading sideways in a much bigger range. Here's dollar China. We're starting to see some wild moves. So, big move to the downside yesterday, about 300 points, and then sort of straight back up, bit of Chinese weakness in the afternoon. So, once again, that really is flying around. The US-China trade issue is starting to become like Brexit, where random announcements are impacting the market. So just be aware, Aussie and Kiwi, it may look like it's a simple opportunity to get short, but we're seeing all opposing articles and things in the market which are really screwing things up. Now, equity markets, well, to me, this shows you that the equity markets really aren't sure what's going on. Pretty flat. I know they're sort of slightly red, but, pretty close to zero. So, at this stage, without any something tangible from the US or China about this trade issue, we've got to wait and see what's going on. So, but it does show you if China are banning coal imports, it means that their economy is really hurting. And these tariffs that Trump has already put in place are really hurting China. And they are talking about potentially cutting rates, doing a whole bunch of stuff. So, if they start messing around with their currency and start devaluing their currency like they've done historically to keep growth going, that's going to piss everyone off. And, it really goes against the whole idea of the tariff. So, what? China have got to concede that they just can't keep this unrealistic growth going. That, a softer China is a softer Aussie and Kiwi in particular. And that's where I think we may see things lower. Now, just have a look at the general news. Dollar gains in light of impact on soft US data raises. You know, the news services don't really know what's going on. We've got these geopolitical events just simmering. Obviously, Brexit, Polo's speaking there in Canada, and then you got the usual sort of dodgy news with car companies, etc. So really, what we're looking for is something tangible to get the ball rolling, and that's where if I just come back to the MyFX Trading Hub, really focus on what's going on and what's in front of you. Now, by the time I get this video up, the RBA governor will probably already start speaking. He's speaking down there in front of, testifying in front of the Parliament. So we'll see how that plays out. Now, he has the ability to turn the currency on a knife edge. He's already come out and signalled weakness for the economy, and they're very concerned about it. So that, just be aware, Aussie could come under pressure if he starts talking about that again. What do we got? Well, the majors are drifting sideways, and there's, despite short-term little moves up and down in the currencies, the majors are all still trading sideways. These two pairs here, Aussie and Kiwi, you know, they are drifting lower, obviously, on the hourlies. They haven't quite caught up with the dailies, but they, to me, those are the two pairs which are on high alert with this China news about banning coal imports and, you know, just the whole China-US trade issue. They're the two pairs that are going to get impacted the most. We'll see how it runs through. But as I said, these are geopolitical events and aren't easy to identify. Now, coming forward to the next 24 hours, really focus on what's coming out. Obviously, the RBA governor speaking very shortly. Eurozone may get a kick from the German IPO business numbers. Now, these are a good historical number, but what we need is decent variance to get the ball rolling. If there's not, well, then Euro will just keep sort of churning away sideways. And the sort of the big dog in the house today is generally the Canadian retail sales figures. That's the one to watch. It's an aggressive number, and dollar CAD loves moving around. Now it's back in the middle of the range. To me, it could go up or down. Oil is still pretty strong. So to me, strong retail sales figures, and dollar CAD will turn around and head back to 130, 160. And that's pretty much all she wrote for today, traders. I mean, there's it's been a bit of a frustrating one, especially with those Aussie. Let me just come back to the charts here. The Aussie employment numbers yesterday was a massive opportunity to get into a really nice short trade. It did pop above 71.80 straight away on the release of the numbers. And then from there, it's a pretty tough trade. The only reason why it's actually dropped significantly, okay, back from this level here where it sort of retraced to where it was before the data, was the fact of this random news about China, right? And that's the real spanner in the works. To me, I'm a seller on rallies. Now, actually, this is one thing I wanted to show you is if you come into the MyFX Trading Hub, come into the fundamental sentiment there. All right, let me just change that pen. And you'll come across to the flags, and you'll come into the major fundamental sentiment that we've got for all the majors, and you can get a very good wide view of everything that's going on. So when I'm looking at the Aussie, I was looking at this the last couple of days, and I posted in the 247 trade zone. The Aussie's going up, but it's against everything that's happening. The central bank slightly dovish. The economic data is weak. And we've got this geopolitical issue. Now, this is the culprit that's screwing things up. If this turns sour, the Aussie is going to be a really great trade to the downside. And that's primarily because the main data, okay, inflation's weak and has weakened since last month. You've got the dovish central bank. Now, the employment numbers, yeah, there was a strong change, but the rate is exactly the same. So that, to me, that's still sideways. A little slight weakness in the wage inflation. But you look at the rest of the numbers, they are all terrible. So you get a left field event putting, you know, further weakness on the economy. That Aussie dollar is looking very susceptible to a move well below 70 cents. So keep an eye on, it's well worth keeping an eye on anything to do with the Aussie at the moment and anything to do with those Chinese-US trade talks. And as I said, keep an eye on this very closely, the RBA governor, if you can. What you need to be doing is focusing on your news alerts and see what's coming out. At this stage, there's no, just coming back to the Aussie chart, there's no major levels around for my liking just at the moment. So we need to sort of, you know, see where this is sort of just dropped down here. It's like in the middle of no man's land. It's definitely a sell on rallies to me. It's a matter of what we get out of the governor beforehand. He's going to be bearish, so selling back towards 71.25 looks like a pretty good opportunity to me. All right, guys, that's it from me. Have a good trade day. We'll see you in the 247 trade zone. Cheerio.